Hey, how's it going, guys? Welcome back to mentfx, and in this video I am going to give you the golden goose nuggets to become the most profitable trader in the whole wide world. Now, the golden nugget is to take your mouse, take the little thing right in the middle of it, this one right here, and do this. And keep doing it. And keep doing it until you can't do it anymore. Extend the chart, put it onto your screen, and ask yourself, where am I on this chart? With only the information you have given to yourself, ask yourself where you are on this chart. What do I mean by that? Go to the left a little bit and ask yourself, what happened? What do I see? Where are my largest swings in this market? There's a swing up here from somewhere down here. It came to here. Made the swing down, created this high. Okay, within that, it came down to test that swing and came to make a new and brand new high. What can I expect? I want to expect to move back down into that same area and continue to make a new high. Okay, very simply, all we're doing here is taking the time frame we're on, and again, you can do this on any time frame, and we'll show you in a second. And you're using the cool little golden goose button in the middle of your mouse, the one that does this, but you're using it to go as far out as you possibly can on the time frame you're on, and asking yourself, where am I in price? And you're going to draw it out using some very, very normal elements of higher highs and higher lows, and you're going to have an anticipation printed for what you want to see price do into the future. Okay, now, why are we doing this? The reason we do this is because you need to disconnect the idea that what we're doing is trading time frames and understand that we're trading price. Price moves the exact same way across all time frames. Time frames do nothing for us except help us view what price is doing on a better and lower level, and in some cases on a better and more zoomed out level. Your biggest rule out of this entire video is zoom out. Why do I say that? Well, now that we are zoomed out, we can see this right here. Actually, we can see this right here at the very top, right? Very simply, as a break of structure. Now, if we know that's a break of structure, then we know the new high that was just created right up here is now functioning as liquidity, based on my other videos, as you all understand. Now, as price makes its way back down into the areas here, under the supposition of the previous video and under previous classes, we understand that this low right here, the very low here, is a protected low. We treat this on this time frame as a protected low. What does that mean? That means that despite the fact that price is closer to this low than it is to this high, the anticipation of the next movements in price on this time frame, and again, I could be wrong, it doesn't matter. It's about anticipation. The anticipation of the next movement in price is to see it come and make a new higher high. That's it. It's as far as we can use our golden goose button. The golden goose button cannot go back out any further. You guys can hear it. My mouse literally can't go further. This is all we can see, and this is all we're going to use to recognize this, which means, and again, this is not financial advice, this as is already valid. And the probability of this happening is higher than it coming back down, but you can go and utilize everything else you know, such as Wyckoff, supply and demand zones, and lower time frame structure to confirm this and get a significantly better entry to the top side. Okay? So what I'm trying to say is what we're doing already is valid, okay? And we've drawn out everything we can draw, and now we can begin to look at the inner moves. This is where a little bit of Elliot wave theory comes in. We are not using Elliot wave at all, but the idea of fractals within fractals within fractals of structure is going to be shown here. So again, take your mouse from the most recent impulse and ask yourself, where are the impulses? Okay, there's an impulse, a pullback. There's an impulse, a pullback into the previous impulse. There's an impulse, okay? This whole thing is its own impulse. Even though you might have thought this was the impulse, which you could have at the time, Right now it's this one, your pullback, okay, into that impulse. Your impulse, your pullback, still expecting potential bullishness, and instead of that, it fails and breaks structure. Comes and tests that impulse and continues that bearish structure. Comes and tests that impulse and continues that bearish structure. Now, if we were to see buys from the areas inside of here, right? So whatever supply and demand zones rest, you know, inside of these zones here, wherever they are, it's a very rough sketch, but wherever those supply and demand zones are, if price was, for instance, to accumulate and create a reason for you, okay, sorry, that looks like a little bit like a dick, but if price was to accumulate a little bit and create an area, a transfer of weak to strong hands, what would you expect this buy could run to? Now, it's true that this buy here could run all the way into new liquidity highs. That's true. But based on what we've now outlined as the lower time frame structure, the next run that it might have is probably going to be into some of the supply and demand zones inside of here, or the fulfillments of some of the imbalances inside of where, right? Remember imbalances, don't forget what they are. Where are the imbalances here? In here, very simply. So it would make sense that if we were to see an accumulation, those accumulations could run into these zones here, the last lower high of this higher time frame, which, by the way, as you can see, we have never zoomed out once yet. Now, the reason this works very quickly, just for all of you, if we now go to a weekly chart, okay, and we zoom back in. Now, notice how even though we were on a 30-minute chart, we could see this weekly unfolding of price. This is the reason you want to understand the fractal nature of the market without needing to go look at multiple time frames. You can see this weekly structure on the 30-minute. It's a question about zooming out and viewing it with your eyes. Similarly, if we zoom out on the weekly the exact same way, we have the major points. We have this swing, this break of structure, this move back into structure, this move down. On a lower time frame, if we are bullish, which we are right now, where can this bullish run come to? Inside of these supply zones. And again, this is all perspective based. By no means is it anything more than a perspective. But if we are to see bullishness, as if I was a bank, it would make a lot of sense for me to start accumulating at the breaks of structure on a lower time frame, because if we just want to look at a lower time frame, what do? We zoom in. And what do we see? We see impulse, 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 break structure. Structure's broken. We are bullish to where? The previous lower high. All it takes in some cases is to zoom in or out of the price action you're looking at. So again, that 30-minute weekly, that weekly is shown to you on a 30-minute with nothing more than just zooming out on price. And similarly, just by zooming out on price and we can see that weekly move, we can go further in and see these moves here. Now, what are these intermediary moves right here? Based on the way they've moved, they're most likely daily or 8-hour structure. So we can go to an 8-hour and take a look, right? We'll zoom in. There you have it. So that's your 8-hour structure. Without having to go to the 8-hour chart or the daily chart, right? It doesn't really matter. There we go, daily chart. Without having to go to the daily chart, we can view the higher high, higher low, higher high, higher low, higher high, higher low, higher high. We can view that exact same structure we just pointed out on the 30-minute just by zooming out using the golden goose strategy, right? And using that golden goose strategy to see exactly where we are in price and what the next anticipations in price can be. Okay? Now, again, let's go back to the 30-minute. Now, while on the 30-minute, and we're viewing this 8-hour or daily structure that's now broken bearish, and we zoom in a little bit more, what can we see on the inside of it? Well, we can see the lower low, lower high. The new impulse, this is lower low, lower high, lower low, lower high, lower low. Okay? So if we do see a bullish push, there can still be a bullish push that comes to fulfill the demand zones, the supply zones inside of here, and the imbalances, right? If you want to look at imbalances, you can also pinpoint those imbalances, however it is that you want to trade this. Now, if you pinpoint those imbalances and those supply zones, your expectation can again be to see the buys into here, right? And then we'll continue the sells, which will be part of the larger time frame buys. Okay, so this is how we view the market fractally. There's no special sauce to it. There's no special rule. There's no fibs. There's no pullback mitigations. There's nothing more than your eyes telling a story about how price has moved, how price has unfolded to new highs, how price has broken in structure at those new highs, how price has created the transfer of weak to strong hands and begun the shifts in structure to continue the real distributions to then potentially, in the case that we again begin to see weak into strong, create the accumulations higher. The exact same thing that actually happened on Bitcoin. Let's delete our Bitcoin markup just so I can show you guys, right? You have price unfolding to the top side, giving you those higher pushes in price, creating highs and highs and highs, weak to strong hands, the shift into a bearish order flow with the shift of new protected lows, previously protected higher lows being taken out. So what is the anticipation? That we are ready to run the previous protected lows. And why am I bearish on Bitcoin? Even if it begins to make a high here, why am I bearish on it? Because I want to see the protected previous higher lows ran as they are being ran right now, with the first impulse, the remitigation, and on a lower time frame with the weak hands into strong hands, and continuations lower. Okay, so what are we looking at right now? More likely than not, we have the weak hand transfer into strong hands, the breaks of structure, and we will probably expect now, if we get the confirmations we look for, because we understand we can look for confirmation, just because it's probable in a break of structure like this that price will continue lower, doesn't mean it's guaranteed. But when you confirm that break lower with an imbalance fill and a Wyckoffian distribution, then that probability increases tenfold and you can take that lower. Similarly, just because we're expecting this to get ran does not mean it has to be. And just because we've seen this shift in structure on a lower time frame does not mean it has to run lower. However, given that it has shifted lower here, we can expect the sells inside of here to continue the bearish push to start running liquidity here and the liquidity here and make new lows on Bitcoin. And everyone will be kind of set and going, oh, what the fuck happened? You know, like, how did Bitcoin make new lows? And the reality is it was just following structure, okay? So that's just something I wanted to go over on Bitcoin really quickly for you guys, so you can see that there's that structural shift. The exact same thing, the structural shifts, right? Move, distribution, continuation lower. And you have the exact same thing happening on I forgot what I was on a second ago. Oh, there we go. On GU, right? It doesn't matter that we're on GU, but what we have is an anticipation of what price can deliver to us. And we understand that a movement up to here isn't necessarily a bullish push to continue higher. It's instead probably a continuous bearish distribution to begin to formulate this larger, right, snowflake schematic. Lows, lows, potentially new lows, right, that are going to get liquidated, accumulate if it wants to accumulate, and give us the opportunities to take them higher into areas here that might hold, or into our higher time frame, which we're using with the golden goose time frame without looking at higher time frames, just zooming out, areas up here in the form of liquidity runs on the buy stops resting above here. Okay, so again, notice how on one time frame, the 30-minute, we viewed structure 1, structure 2, structure 3, okay, and we can even get crazier. Okay, what do I mean by that? So let's delete all of this. I know it's getting a little bit confusing. So that's about 3 structures. What do we see on a lower? There's actually 4 structures. There's this lower high, lower low, lower high, lower low. Now, again, the higher one shows us this impulse right here, right? Right here. Right there. Oh, sorry. Shit, my bad. Let's go like this. The higher time frame shows us this structure right here. Now, the lower time frame shows us this structure right here. What does that mean? That means that if we do see a break of this structure, just because this right here is a shift in structure higher, the anticipation wouldn't be to see prices go off to the fucking moon. The anticipation would be to see price come and tap into some of the imbalances and supply zones in this structural move here and continue to manipulate and take out liquidity until it meets our specified zone that we might have found in here, which you'll again go in and find the imbalances. So, you know, you could go inside of here and say, okay, well, I have, you know, this is my imbalance zone that price is probably heading for. You know, there's one a little bit lower as well, but it would make sense for price to come and tap into these zones. You know, is price tapping into those zones right now? No. So I at least want to see price tap into that. So I believe that a break of this is not a bullish continuation to go to new higher prices, but instead is a bullish push to grab the liquidity above here, distribute short term, and break lower, and then continue higher. Now again, this does not have to play out at all, but drawing out a bias or an anticipation like this is what will actually give you the ability, even if you're correct 5% of the time on your anticipation, the second the anticipation begins to play out, that 5% can now be transferred into an executed 70%, 80%, 90% win rate, whatever it might be, based on how you partial, based on how you manage. And that's how you're going to formulate an entire system for yourself on how you want to trade. Now, again, all I want you guys to take out of this video overall is that you can see every time frame structure pretty much by using the golden goose strategy, by taking the little button in the middle of your mouse and zooming as far out as you can and asking yourself, where are the logical swings in the market that have created proper mitigations of areas that might have had large sell to buys or buys to sell and are showing me that confluence of weak to strong hand transfer. And if you don't know what I'm talking about, make sure you go and look up weak to strong hand transfer. Otherwise, go and find that on YouTube, or you can skip that all and join the Launchpass. Join the mentorship at launchpass.com/mentfx/mentfx. We have a private entire course for the people that do not want to work through everything on the YouTube and start ahead with a community. Now, either way, you don't have to join. You can perfectly and easily learn from all this and utilize it to become profitable. But that is how you formulate an overall expectation in the market and begin to trade it without having to go on any other time frames. Now, again, if you want to trade the intermediary sells into those points there, you can use the lower time frame structural deliveries that create breaks of structure, mini retests of those areas, and continue to run liquidity lows. That's perfectly fine. But for you to be able to start to anticipate which real highs and lows want to hold and which protected lows or protected highs now function as potential liquidity, what you'll have to do is use the golden goose strategy to zoom out in your charts and ask yourself, where is the major swings and how are those swings delivered? That way, when you see something like this on a lower time frame, right? Because this on I'm guessing a 4 hour looks like a bearish structure, right? At the time of, we go to 4 hour now, let's take a look. Is it in here? Perfect. On a 4 hour, during this push here, maybe even an 8 hour, honestly. 8 hours fine, yeah. During this bearish push, move up, bearish push, a lot of you might be looking to begin to sell in this area here, right? That's valid to sell too, by the way. Just so you know, this is a valid sell if price hadn't delivered the way it had delivered here. Because if you just zoomed out from that same price action, you would have seen, based on my previous videos as well, the ones where I did the 15-second time frame challenge, if you go and check that out, you would have seen this break here. So you know that the real liquidity lies above this high and above the highs here and above the liquidity highs up there. And as a result of that, these pullbacks, even though they're putting in motion a bearish structure, are nothing more than liquidity grabs, which are, again, a grounded principle of Elliot wave. If you think about Elliot, it's 1, 2, 3, 4, 5, A, B, C. Then it repeats, okay? 1, 2, 3, 4, 5, A, B, C. Now, as you can see, an overall bullish structure is being printed, and inside of this overall bullish structure that's being printed, there's also bearish structure breaks. But those bearish structure breaks with lower highs and lower lows are false indications because they're nothing more than liquidity grabs of the bigger bullish trend. And that's exactly what's happening here. You have a bigger bullish trend already being put in motion. And you're having the pullbacks that begin to put in motion lower highs and lower lows, lower highs and lower lows. But those lower lows and lower highs are for the purpose of mitigating previous positions and liquidating other people that are trying to get involved in this upwards move. So as a result, just because we're seeing structure deliver a certain way, again, shouldn't be a good enough reason for you to fully believe that you can take a trade in that direction. Now, you can create a system around that, and that can be perfectly valid. However, you need to make a disconnect between just seeing structure and expecting it to continue, because in that case, you'll be tricked out on the wrong side of the market a lot of the times. You need to be able to take in what you see here and zoom out and take in what you see on a higher time frame and understand how certain breaks of certain lows will create and put in motion a new bearish wave, right? If there were, for instance, breaks below the lows here, it will more likely than not put in a new bearish wave of price action that's going to start and run these previously protected lows, right? All the way probably into the lows all the way back here. Right now, again, that's very long-term speculation, and it's a very if this, then that, right? Because we, in this market, as smart money traders, we need to understand that we operate under a if this, then that bias almost always. If we see this happen, then we can anticipate that. If you can't do that and you can't create a story and allow that story to basically unfold in its own ways, almost like if you think about like that I think it's in Harry Potter, I'm not sure, where they open the book and it just paints into existence. There's a random story that paints into existence. Or think about SpongeBob with his little pencil. He could paint SpongeBob and he's like, oh, I got my SpongeBob friend, but then that SpongeBob becomes fucking evil, right? That's because you need to not only paint an observation, but expect that observation to be flexible and change as it plays out. Now, that's the only thing that you'll need to become profitable, but that thing is very hard to execute and learn. But when you start to see it and you start to understand that structure has no reason to always move in any given direction, like, I mean, there's going to be an overall structural bias, but understanding that just because structure is doing this on a lower time frame does not mean that you're excused from seeing the overall push, right? Just like this. And that's the difference, which we talk about in the mentorship, from institutional structure and candlestick structure. So literally view your candlestick structures, but also view your institutional structures and understand where you are. If you want to take that to the next level, join the mentorship at launchpass.com/mentfx/mentfx. Otherwise, stay tuned to the YouTube as there are going to be some amazing announcements in the future on the prop firm and some amazing giveaways for you guys. Thank you very much. I hope this video helped some of you, helped a few of you understand how I view the market, understand that we are playing from an anticipatory state of mind when it comes to this market, and I hope this this helps you in your journey. Thank you very much, guys, and have a great week.